How is the trading environment for your portfolio companies? And I'm going to ask that question to Nick.
So for portfolio companies, the economic environment can make quite a difference depending on what they're doing. And certainly some of our companies have had to work harder at sales. Sales cycles are longer. But a lot of our companies, and I think this is true for many VCTs, are investing in innovative companies that are really delivering some new value to their customers. And actually, you know, in this climate, potential customers are having to look very closely at everything they're doing, finding new efficiencies or extra value, and often finding that in exactly the younger, innovative companies that we are backing. So we are seeing strong growth still in quite a few of the companies, which is very encouraging. We're powering through the more difficult climate.
That is good news. How about you, Ian? Are you seeing similar with your portfolio companies?
Yes, I think for our companies, probably the same for the group, but definitely for ours, they're relatively early stage businesses, and really the much more important thing for them is the success of their own product relative to any competition there may be, rather than the macroeconomy. One way that the macroeconomy and interest rates can affect startups is by the environment for fundraising. Clearly these are growth businesses. They want to be raising more capital to invest, and that definitely became a bit more challenging for some in the last 18 months as interest rates went up. But I think even they are beginning to see in the portfolio a bit more activity of companies that maybe stretched out runway for a long way now are beginning to raise money again, seeing a bit more signs of M&A, etc. So, overall, I think we're probably through the worst, fingers crossed.
That is encouraging. I do think the last couple of months of 2023, we did see a bit of an uplift in terms of activity and quite a big change in sentiment. Andrew, how are you finding your portfolio companies at the moment?
Certainly, if you looked into the portfolio, we're seeing similar situations to what Ian and Nick have described for certain companies. I just build on that by saying we're often investing into companies developing advanced technology. So some of those companies are still in the R&D phase. So they've arguably had less to lose when there's been shocks to sales. They didn't have those sales to lose. And then building on a point that Nick made, some companies can really benefit from drivers in the market that go beyond macroeconomic challenges. I'll give you an example. We've got a company called Rovco. It's developing advanced robotics to dramatically improve the efficiency of building offshore wind turbines and also surveying those turbines once they're built. That's a huge growing problem that the world needs to solve, and their technology is in demand because of that. So they're actually benefiting from what's gone on over the last couple of years.